With the trade war started by Donald Trump with his reciprocal tariffs, there is a lot of uncertainty. How is this going to affect Singapore's property market? Which segment will potentially be the worst hit? And we always say that when there is crisis, there's always opportunities. But is this a buying opportunity or a financial trap? Watch this video to find out important data that will affect the property market so that you can make informed decisions, and at the end I will share some recommendations. Hi, I'm Kai. If you like contents like this, please like and subscribe to my channel as it will really help and encourage me greatly. Thank you. As of now, there does not seem to have a big impact on the property market, as we can see from the average transacted price for the first 3 months of the year. Do note that generally, there's delay for the data to come out because the property transaction take a long time, and it has only been 3 weeks since Trump's blockbuster reciprocal tariff announcement, and this really tanked the stock market immediately. Now, let's look at the different property segments that will be affected. We first look at commercial properties, including industrial, offices, and retail. Later on, we will look at the residential segment where I will spend more time as more people are interested in this segment. With the new tariffs, the most affected will be businesses. For commercial, including industrial, retail, and offices, there are two main types of buyers. One is investors, the other is businesses buying for their own use. So for businesses buying for own use, most buyers will be holding back on such big purchases as they want to conserve more cash to hedge against the uncertain business climate. So these buyers will generally hold back. The other are investors. Investors are generally not buying because they need the place, so there's no urgency to buy. Furthermore, these investors will also think that price will go down, so they want to conserve more cash to wait until the market go down before buying at a discount. And when there is a big uncertainty, generally banks will hold back on lending, and it will be difficult for buyers to get a loan. So generally, commercial properties will be very much affected by the global economic situations, because the majority of the demand, the buyers are investors or business owners who are more affected by the global economic climate. So I will not recommend anyone to stretch too much buy this type of property for the time being. But for buyers with strong financial abilities and holding power, they can really monitor the market for really good deals. Generally, I'm more conservative on property investments, as I feel this is how property investment should be. And if you like more property contents with a more conservative investment approach, please like and subscribe to my channel, and it will really help and encourage me. Now let's move on to the private residential property segment. Are we going to see a repeat of 2013 where we have 5 years of market downturn? Or the case of 2020 where COVID just temporarily suppressed demand for a few months but prices raised up shortly after? Since 2013, where successive cooling measures, especially ABST, have effectively taken out foreigners and multiple property owners from the buyer pool, 2013 is the time where the market shifted to a new paradigm where demand from investors and multi-property investors are removed from the market, and we are left mainly with homestay buyers. In 2013, there is about 100,000 confirmed supply that will be built and delivered in the next few years. This is too high a number, so the market tanked for 5 years before this supply is cleared up and prices start to rise. In 2020, during the start of the COVID pandemic, there is a lot of uncertainty. So many people hold off buying a property and prices dip slightly. But because the supply is low and COVID delayed the completion of new houses, creating a low supply environment, we can see here the supply of upcoming units is only about 52,000, much lower than the 100,000 in 2013. On the demand side, because buyers are mainly buying for own stay, they buy when they need to. For example, when they get PR status, citizenship, or when they need to move near to the ideal primary school for their children, or when they need bigger space for new family members. These demands are pretty constant and inelastic, and so, therefore, as long as buyers have the down payment and be able to secure a loan, most buyers will be willing to buy. And this is the main reason why prices shot up from the end of 2020. This is because the supply is kept low while demand has been consistent, resulting in a supply and demand mismatch, and this causes the price to increase. So, we are now in 2025. With the trade war crisis, are we more similar to 2013 or 2020? Currently, the supply is at about 55,000 units, which is very similar to 2020 and is on the low side. Furthermore, in 2025, there's only a projected completion of about 7,000 units. This is pretty low compared to the average of 12,000 to 14,000 a year to maintain a stable market. Therefore, we see a pretty sharp increase in the prices in the first 3 months of the year, and we are now in April 2025. If there's no tariff war, we will definitely see the acceleration of prices for the rest of the year. And maybe the government will even have to introduce cooling measures. In the first 3 months of the year, buyers are willing to pay high price to chase for their ideal home. Therefore, the price sees a pretty sharp upturn. So demand is still as strong as previously. Only that now the tariff war has thrown a spanner into the mix, complicating things a little bit. So what are the experts' expectations of the performance of our economy? The Ministry of Trade and Industry, although downgraded the forecast, they still forecasted a 0 to 2% GDP growth. DBS CEO Tan Su Shan sees silver linings. Definitely everything is not rosy and there are challenges ahead, but the current available information is telling us that the situation is very similar to 2020 COVID crisis, where property on the back of demand shortages can shrug off some of the negatives and present good buying opportunities for buyers who are ready and can identify the correct properties that offer good deals. So in summary, for commercial, including industrial, offices and retail buyers, I feel that only buyers with very good financial backing and holding power can take advantage and find good deals, as the risks are generally a little bit higher in this segment. For the residential segment, as long as the buyer is not borrowing money or pay for down payment, this crisis can present good opportunities for majority of the buyers. And this is pretty much like the buying opportunity of 2020 COVID pandemic. And as long as there is a professional agent who can help you identify good value properties, you should be fine. And as the saying goes, when there is a crisis, there is opportunities. And if you need someone to help you analyze your situation and identify a good deal for your specific requirements, and you do not have an agent that you are working with, do reach out and we can see if we can work together to help you identify a good property that can suit your unique situation and is a good undervalued deal. Once again, I'm Kai. See you soon.